Hello everyone, welcome to my channel. Uh, as part of company X-ray analysis, today our discussion will be on Indian Railway Catering and Tourism Corporation, familiarly known as IRCTC. So most of you might have used this particular IRCTC in your life. So, in company X-ray analysis, previously we discussed about Reliance and we also discussed about TCS. So today we'll be mainly focusing on this particular IRCTC. So in this particular video, we will be understanding what is the business model of IRCTC and who are the competitors for IRCTC and what are the growth drivers of IRCTC and what is the growth prospects of this particular IRCTC? So today this will be our major discussion. So as most of you might be knowing, generally we use this particular IRCTC for railway ticket booking and this particular company also provides catering services. So we can say that for railway ticketing and catering services, IRCTC is considered as a monopoly. So generally, if you observe this particular company, we use this IRCTC for internet ticketing, catering, tourism, and rail near. And this particular company listed, the company went into IPO in 2019. So the company listed in 2019. Now, if you try to understand the revenue model of this particular IRCTC, what kind of business the company do? So as I mentioned, the major business is rail ticketing. So they allow the users to book the train tickets by using this particular IRCTC platform, and they also provide catering services in train, and they also provide tourism services. So normally, if you observe this particular diagram, millions of users they do millions of transactions every day in this particular IRCTC platform. So this is online ticket booking and servicing platform. So their major stream of collecting the revenue is the service charges or the brokerage charge, and normally it is having almost 80 plus percentage of EBITDA in this particular segment. So the major source of revenue, as I mentioned, the convenience fees and the margin collections, and it is considered as a monopoly. The IRCTC is considered as a monopoly because millions of users they do millions of transactions every day by using this particular website, and they do have a significant EBITDA and they do have significant net profit margin. So primarily, as I mentioned, primary revenue stream is ticketing service and high margin ticketing. They do have 80% plus EBITDA in this particular segment, and they also provide catering services and they also provide tourism services. So this is the basic model of this IRCTC. Now, if you see the financial performance of this particular company, so generally it is the revenue is growing by around 50,000 to 40 crores. So the last reported revenue is 50,000 to 50 crores, and the last reported net profit is 14,000 to 53 crores, and they do have a profit margin of 28 percentage. And most interesting thing, their balance sheet looks clean. It means they are completely debt free. So they do have zero debt. So they don't have any gearing ratio here. And if you see the revenue trends, if you observe the revenue trends from financial year 2021 to financial year 2025, so this, as most of the industries, they are affected during the COVID phase. So this IRCTC also, this COVID had a significant effect on the company. So during 2021, their revenue was 7,767 crores. And after that, we observed a strong recovery in CAGR. In 2025, it is almost 46,748 crores. and they also their year-on-year growth percentage also normalized. So initially they do have had a COVID hit, but they very strongly the company recovered from the COVID hit. Now, if you see the net profit growth from financial year 2021 to financial year 2025, so they do observe 7x growth in 4 years from 21 to 25. In 21, the profit was all the reported profit was 1,870 crores, and if you say in 2025, the reported profit is around 13,149 crores. So the recent growth is around 15%. So every year we can observe a 7x growth in the IRCTC company. 7x growth observed in this particular company. So it means the growth is exponentially growing. Now, if you see the business segments, as we discussed at the beginning of this particular video, they do have in the business they are in the business of catering and internet ticketing and tourism. So normally almost 60% of the revenue IRCTC generally they generate from their catering. So 21,250 crores. This is the last reported revenue from the catering services. So this is considered as the largest contributor for this particular railway catering. And they do generate almost 5% revenue from rail near and around 10% revenue from tourism and 25% revenue from internet ticketing. So internet ticketing is having a very huge margins. And even the tourism also from the last 3 years it is significantly growing. But the largest contributor in revenue to this particular company is through from catering. Then we can consider this IRCTC as a monopoly because they do have a strong support from the government. They do have strong backing from the government. So they do have exclusive rights for railway ticketing, and there is no direct competition in core business and strong motive. So there is government backing. Then if you see IRCTC versus private platforms, normally if you observe the future competitions or the existing competitors, normally when it comes to direct train bookings, so it mainly focus on the Indian Railways. So if you see the other private platforms like travel booking aggregations like comprehensive flight, bus and activity bookings like My Travel, what is this? There are certain travel platforms or there are certain travel booking platforms, Make My Trip and all these things. And when it comes to the trains, so deep integration with rail network core specialization. And if you see the competitor like Redbus and airlines, they are specialized in air and the other mode of transports also in addition to train. And when it comes to in-train e-catering, so railway approved mail delivery, meal delivery to seat. Normally, IRCTC generally this is a approved platform which delivers the meal to the seat. Now, in addition to this, they do have some external food deliveries like Zomato and Swiggy. So even the customers can also book their food by using these particular delivery apps, and the food will be served in the station areas. But when it comes to direct food delivery to the seat, IRCT is the only player. Then utility focused interface, and there are certain modern apps also in this, and retired rooms and railway tour packages, railway centric extension, service diversification if you see. And they do have travel and lifestyle ecosystems like hotels and MMT partnerships, daily needs payment. These are certain competitors. So, key features, if you see essential train tools like knowing the PNR status and seat availability and the charts, and there are certain the competitors generally provide the value addition incentives like cashbacks, rewards, user reviews, MMT star icons and deals. But as I mentioned, there is no direct competitors for this IRCTC. But the segment wise for the food delivery, there are competitors like Swiggy and Zomato, and for travel booking, there are competitors like Make My Trip and Redbus. So IRCTC services, if you see massive daily impact and audience, here you can see approximately 17 lakhs meals provided daily to the travelers, and almost more than 17 lakhs travelers generally they preferred they prefer this particular platform for their travel requirements. Now, IRCTC developed an integrated system, online ticketing, food and catering, tourism and tour, water, that is rail near in train, hospitality and lounges, and cross-selling opportunity. This is the complete ecosystem of this particular IRCTC. And if you see the growth prospects of this particular IRCTC, railway modernization, now the government of India come up with the initiation of Vande Bharat. So faster travel and the advanced safety, automated stations, and there is a possibility of 100 plus next generation trains in the next span of 10 years. And rising middle class travel because the railway authority is also focusing on comfort. So just generally there is the middle class travel has been significantly increased. So this is also one of the major growth prospect for this particular app. And digital penetration. So now the people are generally using the what is this electronic platforms for their payments and for booking and for their requirements also. And there is a significant expansion of tourism industry. So this can also be considered as one of the major growth driver for the company. So this is how we see the growth prospect of this particular IRCTC. Then, if you see the strategic expansion, now they are first focusing on payment aggregator business. Still, RBI approval is pending. Unified travel platforms and MICE tourism expansion. Now, play a payment aggregator business, accepting the merchant payments, secure transactions, diverse payment methods, building trust and security, efficient cash flows. Now, still it is pending. And unified travel platform, all-in-one solution, integrated services like flights, hotel bookings, tour packages, and by using AI, what is this, tour planning, and its basic objective is seamless booking experience. Now, MSCE tourism expansion, corporate meetings and incentives, conferences and exhibitions, large-scale events, industry networking, team bonding events, employee rewards program. These are the strategic prospective events which the IRCT is mainly focusing. This comes under the strategic expansion into the fintech and tourism events. Normally there are certain issues, there are certain risk because there is extensive dependence involvement of government because this comes under the Ministry of Railways, fully depend on Ministry of Railways. So there is no key automation area, nothing but there is no automation in the key areas and like reliance for infrastructure and roads. And there is a possibility of policy risk, pricing, convenience fees, and ticket pricing, convenience fees, and fees can be lowered because there is a possibility that the government might lower the fees also because this is directly under the control of the government. So ticket prices are directly under the control of government. So revenue can be regulated anytime. So this is one of the major risk of this particular IRCTC. And if you see the operational risk, now when it comes to the operational risk, there are some critical train catering issues like food quality issues. There were many complaints against the food quality and vendor dependency. And now recently, because of this global unrest, the shortage of LPG. So these are certain operational risks for this particular IRCTC. Then if you see the slowing growth trend, so revenue growth has been slowed 10%, so profit growing moderately, And so for last 3 years, the profit percentage growth has been moderate, but revenue growth has been slightly diminished. Now, if you see, if you deep dive into the financials, there is a high price earning ratio and overvaluation risk. So normally, if you observe high price earning ratio, that is 35 to 40 range, investor expectations extremely high growth priced in, and implied growth rate significantly higher than the historical average. And premium pricing due to the monopoly, dominant in the market position, limited competition, strong pricing power, sustained high margins. So premium pricing due to the monopoly, and risk of valuation corrections. So market sentiment changes, earning misuses, rising interest rates, and price drop potential. So there are certain issues regarding the valuations also. Now, if you see the future of this Indian railways, now there is a significant transformation to the digitalization. So there is a possibility of digital risk, and most importantly, there is a possibility of privatization. So now at present, IRCTC is a single booking portal and limited competition, and they are in the catering and tourism. There is a possibility of privatization of railways because the government is coming with high-speed trains. So definitely government might involve the private participants also to achieve this particular goal because they are expecting a huge investment from the private stakeholders so that they can achieve their objectives. Entry of private ticketing platforms is also there because already we do have platforms like Redbus and Make My Trip, and there is a possibility of data protection and data threat. Now, future scenarios, in case of bull case, strong travel growth. So normally day to day, the passengers demand for these railways has been exponentially increasing. So increasing the passenger demand, modernized rail infrastructure, digital expansion, scaling online services across rail, air, and bus ticketing, and the e-catering growth also increasing. So rise in the domestic and international tourism. So because always this is something which is directly connected to the tourism also. Then when it comes to the bear case, the potential risk, the possibility of private operators entering into the market, and the monopoly dilution, loss of exclusive market dominance due to entry of private train operators, and there is a significant regulatory pressure, government policies impacting prices and operations, and they do have stricter standards increasing cost. It might increase the cost. So if you see the IRCTC investments, if someone want to invest in IRCTC, try to understand the pros and cons. If you compare the pros and cons, the strength, monopoly, dominant market share, sole operator of rail ticketing and catering, high margin, profitable operations, effective cost management, and most interestingly, zero debt. That is debt free, strong financial position, lower risk profile. But when it comes to the cons area, the risk elements, if you see the government control, so this complete IRCTC is completely under the control of government. So there is a possibility of regulatory restrictions, policy changes, pricing intervention, and slowing growth, the market maturation, increase the competition from other modes. There is a significant competition from other modes of transport. And next is overpriced stock, lower potential for the future stock because always the company valued at a premium. So overpriced stock, lower potential for your future gains. Then if you see the final investment verdict, normally if someone is focusing for long-term investors, long-term investments, definitely this particular IRCTC is a good option. And if someone is focusing on dividends and cash generation, definitely this is a good suggestion. So this is suitable for long-term investors, cash generation and dividends. But if someone is looking for high growth, then this is not a right investment vehicle, and this is highly valuation sensitive. because already it is valued at a premium. So the future growth prospect is very minimum.